Monday, January 13th, market analysis. Stan Ehrlich, good morning. I start out with stock market indexes, go to futures, and some other topics. So, what do we have with the E-mini this morning? Now, I've outlined the potential. I'm not real fond of the way this looks. Head and shoulder top in the E-mini. One of the problems, and there's a couple, the same pattern should basically exist in the other indexes or a variation, a close variation, but I'm not finding it. So I'm probably looking too hard to find it in the E-mini, but I have a rally high, November 11. We've got a top, basically December 6th, and we've got a rally high exactly the correct number of days to the right from the highest high, December 6th, and the number of days to the first shoulder, November 11. That's X number of days, and it's exactly the same number of days from the highest high to this high. So timing was just perfect. I'm not sure what this is, this rally in the middle here. And normally the highest high after the head of the formation is the last shoulder. But this is a rally, and it's right on time, and it wouldn't change anything as far as the neckline is concerned, which is drawn off the lowest low after the first shoulder and before the head, so that's it. And the lowest low after the head and before the last shoulder high, which that's it, a bullish engulfing ER buy signal, the green one, on December 20. So that doesn't change. It's just that this is a little higher, that rally on December 26th, than one would expect for this particular pattern and the historical way that it usually develops. Keep in mind, I've seen thousands of these things in 52, 53 years, whatever it is now. So I have trouble justifying this pattern, sort of. Take it with a large grain of salt. Hallstatt, a town in Switzerland with salt mines. Austria, sorry. So anyway, we broke the hypothetical neckline, but we got oversold, which is not uncommon today. And we've popped back above the neckline, which is not what's supposed to happen. And at the moment, we're still up there, and we're down a modest point or so, which is not very much. And the way this market's acting momentarily is it could climb to higher than the previous close, which would look like a washout into a support area and getting oversold and bouncing right back up and be mildly friendly, if not more than that, for a few more days. And that's exactly what a head and shoulder top formation does not do. So I need to close below the neckline, and it's usually a sharp, big down day on heavy volume. That's the classic breakout. So I'm not sure here. I'm going to go with the oversold condition or in support and a bounce back. Now, this low back here on November 4th is very, very important because it's proven to be a very good support area. We have the same, almost exact same lows several times in early October. A bunch of highs, almost exactly the same price again. August, late August, early September, and even further back in time, evidence that this price range, as you come down to it from higher levels, is good support. And it's kind of acting like that at the moment. So we'll see. Now that these comments apply to the other indexes to one extent or another. So let's go look at the 5-minute, I think, chart on the E-mini. And we have a new high since the morning session has started, which was yesterday afternoon, of course. And it's not a total new high. It's approaching the highest high from yesterday afternoon, but a new high for several hours, most of the day and night. That's looking pretty good momentarily. Can't be overly optimistic at the moment, bullish wise, but I see things that tell me I should mention it at a minimum. So there you go. Now the spider's doing the same thing, just needs to get a little bit stronger and above the neckline, stay there to be a false downside washout. Did not quite get oversold, close, but not acting quite like a classical downside breakout. And again, I don't like this last shoulder combination with these two rallies involved. So it's a little weird. Okay, what about this 5-minute spider? Yep, new highs for the morning session. We'll see if there's a lot more follow through. I just love it if it would get above yesterday, Friday's high, and have a bullish engulfing. That would be almost positively a false downside breakout and kill a head and shoulder top idea in any way, shape, or form. Next is the QQQ. It's holding in support. It made a new low, did not quite get oversold, and does not have the same pattern. There is no shoulder on time. This is way too early, although it's a red sell signal. It was a good ER sell signal. We don't have anything on top, just overbought. I haven't got all the parts. I don't want to talk super bearish here at this point for the QQQ. So I think we're close to a turn back up. We're in support, not quite oversold, but trying to bounce back up. So a little ambiguous here this morning about the way these indexes are acting. Let's look at the next one. It's just simply the 5-minute data on the QQQ. And we have closed any down gaps this morning, which there were, but that's gone. Okay. What about the NASDAQ? No gaps. Came down to support. Almost oversold and trying to turn around, but not quite as aggressively as the other indexes. But still trying to bounce off of almost oversold. Very, very close. And you might make a case, I wonder if this line is parallel. No, not quite at all. Nope. So you don't have a channel, downward slanting channel, but you could make a case for a wedge. And I'll do something like this. Yeah, that's pretty close. And raise this back side up a little. So I'll leave this here for a day or two and see if it's relevant. At the moment, I don't know that it's an important line or not yet. Nah, I'm going to erase it. No good. Not relevant yet. Next, just simply the 5-minute data, of course, on the NASDAQ. Next, we're looking at the YM, the Dow, which is higher on the day by a chunk. Up against a little bit of resistance from the last couple, 3 weeks, though. It's oversold, and it could have a bullish engulfing if it were to get way up above and get above Friday's high. Does not look particularly likely, but, you know, things happen when your back is turned, and all of a sudden, boom, it does happen. So if it did, I'd get a bullish engulfing ER buy signal out of this because it's oversold. But if you like the head and shoulder top idea, there's things that are wrong with this. The symmetry is not quite there. There's some kind of a rally here that shouldn't be, and that was November 11th's move. The neckline is slightly upward slanted, which is normal. And when it broke below it on Friday, it was a big downside, heavy volume, classical looking bearish breakout. And so far, if you like the head and shoulder top story, it's not moving back up above the neckline. So that's going to stop the rally. If the pattern's good, it should. And then turn back down again. So this one's worthy of being watched very closely. Next, we've got the 5-minute YM. Okay, nothing special here. No bullish engulfings, just a pretty good bounce at the moment. And what about the Russell? Totally in a huge support area, very broad. But the pattern, again, I haven't got all the details on this. I don't like necessarily what I'm talking about. So This one is a tough one. This is not. This is okay, sort of, and not okay, sort of. So I'm getting oversold. I'm expecting a bounce in a major support area. Not about the best I can do. I'm just not very sure about things at the moment. Okay, so this is the Russell 5 minute. Not that big a bounce. Bonds. Oversold now for over a week. No particular sign that it's turning back up. About unchanged down one tick. If I'm going to have a broad double bottom, it could drop off a bit more. In fact, the idealistic price would be about 107.22. Again, the low way back here on October 20th of 2 years ago, 23rd October, 2023 is the lowest low, and that would be anything close to that potential double bottom possibilities. Right now, I'm a little too high for it to turn back up as far as the double bottom is concerned, but it certainly is trying to bottom out down only 3 ticks with an oversold condition. What about notes? Notes actually made the 10-year notes new lows for the whole many years here. This is double bottom fodder for sure. Oversold conditions right around a little bit below previous important lows, and we just have to have a big turnaround here. Starting to close above 109, say 109.7, would add a lot of fuel to the story about a double bottom on a long-term basis, but that remains to be seen. So let's see if it can do that in the next week or two. Next, we've got crude oil, heat, unleaded, natural gas. Very overbought, getting relatively close to 90. I expect it's going to top out any moment. We're basically high and last, right up against almost a little bit higher, 79.50-ish, or a little bit more, would be into the resistance area. And I do expect it to top out very soon, close to the highs we're at the moment, a little bit higher, and turn back down a good chunk, probably to 74, maybe even lower, 70, 74, something in that ballpark. Heating oil, same commentary. Up into resistance and overbought and flip-flopping back down somewhat already. Now, yes, it has crossed a major bear trend line, and if it stays above that trend line, and that's the one I'm talking about right here, then it's a bit of a different story. But right now, I think the resistance level and the overbought condition could drop it back into this big, broad, downward slanting channel again. So I'm looking for more of a downside correction like crude. What about natural gas? It touched the top of the resistance area almost exactly at 4.366, give or take a couple of ticks. Plus the fact that it almost got to my minimum upside objective of 4.46 because of the head and shoulder bottom that has worked past tense just great. So I haven't any problem expecting a little bit more of a push up through resistance top to 4.46, whatever, and then flip flop back down because now we're overbought again as of today. And at the moment, we are actually lower on the day. So is it going to fail to get to my total minimum upside objective of 4.46? It might, because it got mostly there, probably 90+%. And now lower on the day, if it gets below yesterday's low and can break down even more, we'll get a bearish engulfing sell signal. Looks plausible. Next, we've got gold, silver, platinum. Overbought Friday, at a resistance line, poked through it a little bit, closed below it, starting to move down, low and last, even below Friday's low. I think it could come all the way back down to about 2,600. Platinum. Oh, I'm at silver first. Hey, overbought on Friday. Now a new low and a new low close likely for the last 4 to 5 days, all of a sudden. That's how quickly these things flip-flop all of a sudden. Look at that bearish engulfing ER sell signal on December 12th. Made a new high up into resistance, got overbought for the second day, and all of a sudden, kaboom. So this is a kaboom, sort of. We just didn't get a higher high today than Friday. That would have produced a red bearish engulfing ER sell signal, but that didn't happen. So I'm looking for a move down to test these recent lows of 29.2. What about platinum? New low for a couple of days, almost low and last at the moment. Sorry to say, didn't get overbought, didn't hit any resistance levels. It's just flip-flopping back down somewhat. Turning points don't always have the conditions that you'd love. They just flip-flop. So I think we're going to start slipping some more, given the look of silver, platinum, gold. Yep. Copper, overbought, right in resistance. Now the third day, and starting to show a little more evidence that it's probably topping out here. At this moment, we are still up a little on the day, and we did not get above Friday's high, so you're not getting an outside trading range or a bearish engulfing. So I'm guessing it might take another day or two, and if we start to close above 4.377, that'll be a minor upside breakout of this resistance area, and then you'd have another upside objective of a bit higher, but not too much higher. But now, resistance, overbought. We just don't have a sinking market. It's up 1.0185 at the moment. Okay, soybeans, oil and meal, corn, wheat. Here we go. I'm trying to justify being intermediate to longer term bullish on grains. They have had such long-term bear markets. We could have a double bottom. I've mentioned this now for quite a bit in soybeans, and that same formation could exist in some of the other grains. So I'll talk about it when we get there. We're overbought and just barely got above the high that was made in early November. You realize soybeans have now made a higher high than all the way back to early October, November, December. This is a new high for 3 months. Not to be taken lightly. And if it stays here and keeps going up a little bit more, or more than a little, in the next couple of days, we could have a broad double bottom. And then I'll put some annotations on these lows, markers, take some measurements. I can already tell you the upside objective would be at least up to, let's call it 12, 1,200. Remains to be seen, though, but I sure am liking this a lot. Could be very bullish long term. Minor problem, overbought for the second day. If we do have a pullback and it holds at a little bit lower and then starts to push into new high ground again, well, the double bottom story is going to come alive. Next, very sharp rally in soybean oil. New highs since the middle of November for the last 2 months. So are we developing, excuse me, a very broad double shoulder low? There you go, in May of 24 and June of 24. Sorry, and a low prominent August 16th of 24. Neckline established, upward slanted slightly. Last shoulder low, and you can make a bit of a case for a double. The low November 26th approximately, and the low we just had with the bullish engulfing involved on December 23, and the lowest low is a couple of days later by a few ticks. So that does look like a possible head and shoulder bottom on a fairly broad basis. I would say 3/4 of a year. This very, very strong rally, looking better and better all the time. The minimum upside objective on this would be way up, and that is not the measuring stick for the pattern. I'm going to do it for you right now. That would be the depth of the pattern, and grabbing the little stick, as I call it, And assuming the breakout might take place in a few weeks, the upside objective would be all the way up to approximately 61 and change. I'll leave that there. We'll see if this can continue. It looks pretty darn interesting. I don't have too much of a problem with this bottom formation. Soybean oil is developing a double shoulder, very broad, head and shoulder bottom. Next, soybean meal. Major support area. June of 23, also approximately March of 24, also a little double bottom there and a little double bottom there, and simply a drop into support, broke it a little bit, got oversold, bounced back, rallied to resistance, stalled out on overbought, came back into support and starting to turn around again. Major support, 300 to 290, has turned this market up for today. If we start closing above 322, now we're talking some major long-term potentials. For right now, it's looking a lot more interesting about a long-term potential bottom. It's going to take a while for this stuff to develop because it's such a big time frame and price ranges. Corn. Well, I'll be doggone, it is well on its way for the second day. Shoulder with a bullish engulfing on the low, July 12th of 24. Oversold condition in almost a bullish engulfing ER sell signal, just missed by a hair on August 27th, the head of the formation, and a good looking shoulder with another buy signal, ER sell, buy signal smack dab on the lows. I mean, we got both shoulders. And the neckline is almost flat, upper slanted slightly. A little false breakout right here, but the next time we came above and stayed above the neckline, we stayed completely above it, even though there was a bearish engulfing. It didn't work. And then Friday was zoom, new high ground, very strong, classic bullish situation. Follow through today, looking good. I know it's overbought, so we deserve a little correction, but that's the way bull markets act. You get overbought for 2 or 3 or 4 days, you have a little correction, eliminates overbought, holds at support or maybe someplace, and then makes a new high again. I'm liking this story about the grain markets developing some long-term bottoms. This head and shoulder bottom, we're already about halfway or a little more than that up to its minimum upside objective, which is around 495. I'm liking what I'm seeing. That's my objective, 495 or higher. But I do think it's about to have a little downside correction. What about wheat? Well, just barely the possible broad double bottom story again. And August 27th is the first low. We caught the bottom of the market exactly on the right day with a bullish engulfing ER buy signal. That's the green. Here, we're floundering around a little lower than the August lows, but this little triple low of some sort is looking a little viable now that we've got a nice rally. It just needs to start closing above 555. Then the story comes alive to a much greater degree. So wheat is the slowest to begin to show long-term bullish possibilities. All right, cattle. Overbought, finally starting to have a little bit of a down day. Probably saw a little bit of a high on Friday. We got, relatively overbought at 81, 82, 83. So I'm not surprised. Downside correction should be at least to 193. Wouldn't be surprised if it was down to 191. I think we just started the downside correction out of overbought conditions. And what about Miss Piggy? Well, she got oversold in a support area, and finally, the middle of last week, Wednesday, started to turn around. Nice big rally Thursday, follow through on Friday, and a little bit more today. Now, starting to eat its way into some resistance, and at the same time breaking out of a little support area that I had here for a long, long time. So I can justify saying that we're going to come up someplace in the neighborhood, more likely than not, 86 to maybe 89, a week or two. Finally, we got our stock I've been watching for a couple of months now, SQ. We had a downside objective of 8260-ish, which was fulfilled finally on Friday. And we are now sinking a little bit more. Almost oversold, not quite yet. I think it's very close to bottoming out. Hasn't done it quite yet. Buying it at these prices is a little bit risky, but if you kept a close stop, you wouldn't get hurt. And if you were right, then you got some good rewards here. So I'm very interested in the long side at these levels, but not quite super convinced. But the head and shoulders come and gone now. Next move is very, very big on the upside. This stock has had a 2-year broad, very broad bottom formation developing from outlandishly higher levels. Now, I haven't got the data loaded at the moment, but it was way up, if I remember correctly, at around 200 a couple of 3, 4, 5 years ago. And with a 2-year bottom, this could be very bullish long term. But, it's going to take 6 months, a year and a half, quite a long time for it to get a lot higher. But I'm liking what I'm seeing, and I can easily justify quite a bit of a rally here from this bottom formation. My objective I've been talking about all along is 134-ish. We'll see how this develops. E-mini again. Well, I'm kind of impressed. It's kind of coming up pretty good. Look at the 1 minute or 5 minute chart. You're getting closer and closer to new high for the whole session. I'm liking this. It's coming up pretty good on these indexes. And that's about it for today. Signing off, Stan Ehrlich. You have a profitable day and profitable trading to you.